Howdy, Jacob here. Today we're going to look at Delta Airlines, what I believe is the largest airline in the world, definitely in the United States, in the passenger airline business. Founded in 1924, based out of Atlanta. If you've ever gone to Atlanta, you see them everywhere. They have a whole Atlanta is the busiest airport in the world, and they have the entire terminal, multiple terminals, I believe, or not terminals, multiple gates just for them. I want to compare it a little bit with Southwest. So let me go through all the Delta numbers and then compare it a little bit. So growth is 40.4 billion in 2014 to 58 billion in 2023. So I mean, it's very dependent, as all airline retail business are, with the consumer's ability and desire to spend money. Their revenue is already way higher than what it was pre-COVID. And from an operating margin standpoint, they're not quite at those margins that they were before. They got as high as 19%, but had a 5-year stint where they were averaging probably 15%. They're only at 9.1% currently, but their earnings per share are as high as it because their revenue is a bit higher. Their return on invested capital recently, 12%, fantastic. Again, during that 5-year stint, looked amazing at averaging high teens. Balance sheet shows just 3.8, 3.9 billion in cash-like products with 2.9 billion in short-term debt and 17 billion long-term debt. So they have a good amount of debt here. Let's say 15 billion or 17 billion. What is that in relation to free cash flow? Huge capital expenditures recently. So their free cash flow does not look nearly as good as their earnings. Their earnings, they had 1 year of negative earnings, and it was COVID. And outside of that, we're pretty consistent. You know, the last 2 years is going to be, or 2 of the last 3 years is going to be tough, but they're getting back to consistency. From a free cash flow basis, they only produced $1 billion, which is nothing to brag home about because, again, you use free cash flow for capital allocation. You don't use earnings. Free cash flow is the cash that comes in, cash that goes out, to sustain the business, to grow, to keep the doors open. And then from that, you get to make acquisitions, reinvest back in yourselves, buy back shares, reduce debt, pay a dividend. And it looks like they are reducing debt, but they're selling off assets to do so. And so that's going to hinder their growth in my eyes. And they've been very good at reducing debt. They must have had a crazy amount of debt here, which we do see. Long-term debt of, well, actually we don't. They must have made some acquisition in 2019 or 2020 that, okay, a big investment and a big acquisition that that increased their debt. Because, you know, if you buy a company, most of the time you can buy their debt as well. So for me, their earnings look fantastic. I mean, if they keep, $4 or $5 billion, that's a 5 times multiple. That's nothing for a market cap. That's a great valuation. But from a cash flow basis, which is what I care about more, I mean, even if they get to 1.5 billion, $2 billion, it's 10, 15 times that. So not as impressive. We look at Southwest, it's a little bit different story. They have similar growth on the revenue side, so 40 to 58. Here we have 19 to 26. So revenue side is pretty similar. However, on the margin side, they are not even close to back to operating margin. So here we saw their operating margin, this 5-year stint, almost 15%. They're almost at 10%. Here we saw their operating margin, again, that's that 5-year stint averaging about 15%, similar to Delta, but they have sub 1% operating margin right now. Their return on invested capital was over 20%. Garbage now because they don't produce any earnings. They still pay a dividend, and Delta does as well, 1.4% yield. Their balance sheet is the biggest difference that I see. The balance sheet here has $9.3 billion in cash, $2 billion in short-term investments, with 29 million short-term debt and 7.9 billion long-term debt. So they have more cash on hand to write off their debt, which is their long-term debt, which is not the same at all with Delta. Delta has 3.9 billion in cash-like products with 17 billion long-term debt. let's see free cash flow. So we already know capital expenditures grew like crazy for Delta Airlines to where they are producing a very low amount of free cash flow. You can't really hide that like you can in earnings necessarily. And here we see if this is their capital expenditures line, their capex is also so much greater than what it was pre-COVID. So there's a lot going on in the airline business where they're trying to reinvest a good amount, or they're investing a lot in keeping their Boeing planes, or I think Delta might have some Airbuses and other. Uh, I think those are the only two planes I know, honestly, in their non-American flights, maybe even in some of their American flights. But Southwest, I know, only uses the Boeing 737, I believe, and their free cash flow is nowhere near, and same with earnings, nowhere near what it was pre-COVID. So they're going to have to figure out how to get their cash from operations back up and not be not having so much in capital expenditures. So for me right now, I'm going to make some assumptions on Delta, but in comparing them, I think Delta looks better from an income statement standpoint, but from a free cash flow standpoint, I think both of them look like they're in a bit of trouble to me. And from a balance sheet perspective, Southwest looks way more attractive than Delta, having 17 billion in debt with making 1.1 billion this year and not consistently making a heavy amount of free cash flow. So on the revenue growth side, I mean, I don't think demand's going anywhere on airlines. I think there could be a stint if there is a recession in the near future, but I think they're easily capable of averaging 4%, maybe 5% seems reasonable because you do have extra demand for, people. The more people have more money, the more people are going to travel. And then with that, maybe a 16 PE. Well, for them, their enterprise value is quite a bit higher in market cap. I'm going to give them the market average PE because, again, I think that there's kind of oligopoly-ish things going on. I think, some people prefer Delta or United or Southwest or American, but I think some people just look at prices. Other people do stick with their guns because they want rewards or whatever. And so here for margins, this is being generous, saying they get back to that 7% free cash flow margin, which I don't know if that's the case or not, since I guess it's the highest it's ever been. So I can't even presume that. Maybe we'll say 4%. 4% is what they were back in 2018, it looks like. So if they're able to get back to that, and share repurchases, they're not buying back any shares, so nothing there. Dividend, I don't want to increase that any more than it is, even though it's very small in relation to their free cash flow. They're going to have to focus on debt reduction. So for me right now, it looks like it's an interesting company. We'll have to see whether they're able to. This is really just going to be, can they get back to those pre-COVID margins similar to a Southwest? And I think the only reason I would prefer Southwest is because they've been more consistent in the past. If you look at a 50-year period, they've definitely been much more consistent at making money. They're very efficient with their business. They only fly that one plane. I think it's a 737. And although their technology is a bit old, they got a massive investor going in, which has changed some things up. I don't know how I feel necessarily about that, but the balance sheet is really the biggest difference that I see here. So this would just be, if you invest in an airline right now, you're just basically investing in the fact that you believe their margins are going to go back to what they were pre-COVID over a generous timeline, because I don't think it's going to be happening immediately for anybody. So I do think it'll take time no matter who you are. But I mean, right now, based on these assumptions, this is saying they almost get back to those pre-COVID levels of margins. It could be interesting. I hope you enjoyed video. Have a great rest of your day. Thanks.